Show, and it's Mr. Atul Kumar Goel, the MD and CEO from PNB, who's joining us on the show. Mr. Goel, hi. Good to be speaking with you, and season's greetings to you as well. Let's begin with the asset quality trends because your credit cost is at 0.08% now. This quarter, you saw strong recoveries, and you also revised the credit cost guidance downwards by 25 basis points. Shall we expect strong recoveries in the coming quarter as well? Because your slippages are more or less on the same level.
As far as assets quality is concerned, we have given the guidelines at the beginning of the year around 1%, considering because it was 1.40 in the last year and more than 2% last year. But since in the first quarter it was 0.32, so we have revised from the 1 to 0.50%, and now in the second quarter it is coming 0.08%. So now we are further revising our credit cost because the for first half it is coming around 0.20 basis point. So now we are revising it 0.25 to 0.30% of the for the full financial year. And if you see the recovery every quarter, recovery is double of the slippage also. So when the recovery is more than the slippage, the provision requirement on the new account which are just slipped is very less as compared to the provision release on the whatever the recovery we have made. And another thing is that why we are revising, because 97% is our provision coverage ratio as on date. So our aging requirement has reduced drastically.
Okay, fair enough. And the stock is reacting to all of that. But the net interest income this quarter grew almost 6% on a year-on-year basis. And the cost of deposits increased by 8 bips sequentially, which of course impacted your NIMs to an extent. Is more of deposit repricing yet to come? Will it remain in an upward trajectory going forward as well, sir?
Actually, in my opinion, the rate interest rate on the deposit has reached on the peak. So I do not see that there will be a further increase in the deposit rate, but basically sometime it is the demand and supply also, because if there is a too much of the demand of the deposit and the supply is less, so that is the reason that sometimes the rate of interest is become harder. But I don't think there will be a further increase in the rate of interest. And the guidance for the NIM, we considering this only, although our NIM was more than 3% in the last quarter, but considering this, we have given the guidance for the 2.9 to 3. So as on date also, we are giving our same guidance it will be 2.9 to 3%. And moreover, one more thing also, we have given guidance in absolute number. In absolute number, our net interest income will be positive quarter by quarter. If you see the trend of the last 12 quarter, it is always positive from the previous quarter.
Mr. Goel, the pre-provisioning operating profit was supported by higher other income as well as the higher treasury gains that we saw this quarter. Can you explain that part too, and what's the expected way going forward?
Major portion in the other income is from the two. One from the treasury income, and another is the recovery from the return of account. So because our treasury is very active, you see the first quarter the profitability was around 325 crore rupees, and the last quarter September quarter it was increased to 762 crore rupees. And because our treasury is very active, they are making the profit from the SLR security as well as on the equity market also. So I am hopeful that we will be in a position to maintain the same profitability in some of the another quarter also. As far as the another major portion from the recovery from the return of account, as on date still my TWO book is still more than 92,000 crore rupees is available, which is the gold mine of the Punjab National Bank. But every quarter we used to recover around 1,000 to 1,500 crore rupees, and I hopeful that number will remain same. We will be in a position to recovery from the return of account. So I do not find any challenge ki whatever the other income we are having in the previous quarter or the last quarter also, so there should not be any challenge. We will be in a position to maintain the same number.
Okay, and the loan book growth is strong as far as the RM segment is concerned, but lagging a little bit when it comes to the corporate side of the book. Do you think in the coming quarters the growth will be fueled by retail and others only, and do you see any tailwinds in corporates at all?
Actually, what is our focus area? Our focus area is the RAM, retail, agri, and the MSME. But doesn't mean that we are not financing to the corporate also. Even as on date, I may tell you the 1 trillion book which we have already sanctioned to the corporate, they are still to be availed, and some of the in the working capital form, some is the term loan, because when we are giving the sanction for the term loan, it depends on the utilization and the stage of the project which they have implemented. But the as far as there is a good demand in the retail, because if you see the RAM, the growth was around 12% as against 12.82% for the YOY in the entire category, and particularly in the retail side, there is a growth of the 14.62%. Even in the retail, the 19% growth was in the home loan and 25% in the vehicle loan. Even the agriculture, if you see, there was a growth in the double digit, it was around 11%. MSME growth, there was a growth of around more than 8 to 9%. But the growth, some of the account, on account of the upgradation in their sale or the investment limit, they have come out from the purview of the MSME. If we will add that, so even the growth in the MSME was also 10%. So my reply to your query is only that the focus area is the RAM, but doesn't mean that we are not giving the loan to the corporate, because we are the one of the largest bank of the country. If any opportunity for the corporate funding, so we will not allow to go from the Punjab National Bank.
Okay, point taken on that. But clearly, there's a bit of a worry when it comes to the unsecured side of the book, and we've heard it from many of your peers as well as RBI, etc. Is there any way you can help us quantify how things are at PNB with respect to the unsecured book?
Definitely, I do not find, if you see my unsecured loan book, that is very, very minimal, particularly for the retail. The retail may the total unsecured funding is only 27,966 crore rupees, as against the total book of more than 10.60 trillion. And out of this 27,000 crore rupees plus, credit card is 1,000 crore rupees, education loan 4,300 plus, then the pensioner loan against the pensioner is more than 4,500. Remaining is the around 18,000 crore rupees in the personal loan. Out of this 18,000 crore rupees, around 4,200 from the digital mode and remaining from the physical mode. Normally, at the time of the launching this product, we have estimated that there will be around 2% delinquency, and that has been priced in the product also. So as on date, if you see, that is around 2%. So I do not see any worry, because the portfolio is very less. Even for more data I will give you, that is not related to the unsecured, but the how the new underwriting is behaving. Every month we are reviewing this data. This number I am giving from the 1st of the July 2022, September 24. It is a data of around 51 month, how the new underwriting behaving. In last 51 month, we have sanctioned around 9 trillion loan. Out of the 9 trillion loan, we have disbursed 8.19 trillion we have disbursed, and outstanding of the new book is 6.31, which is around 60% of my total book. In 6.31 trillion mein, the NPA is hardly 2,374, which is coming only 0.29% of the new book. And in this segment wise also, if you see, the agreement is 0.45, the MSME it is around 1.44, and the retail it is around 0.28. So the new book is also very good. So in the new book, new underwriting as well as the unsecured retail, I do not find any challenge.
Okay, so that's good to know that you're not finding a challenge on the unsecured book, unlike the rest of the peers in the industry. But in the view of rate cuts, can you quantify how much of your book is external benchmark linked, and how are you planning to maintain your NIMs?
Around 41% is my book linked to the external benchmark. And in addition to that, around 8 to 9% is also linked with the another different type of the external benchmark. So roughly you can say around 48 or 49% is the book is linked to the external benchmark. So definitely, if there is a rate cut, definitely there will be a pressure on the to maintain the NIM. But I am thinking, because if you thinking around 40 to 50% of my book is the external benchmark, that is coming around the 4.5 to 5 trillion. Similar amount I am having more than that in the saving bank account. So we will take appropriate call at that time whether we can absorb by reducing the rate on the saving bank deposit.
Okay, sir, on that note, we'll let you go. Thanks so much.